Hi Anand.
Hi Vinod.
We read this interesting article, both of us, a couple of days ago, about the Fed Reserve in the US, that it's got its complete take on the inflation which is happening in the US wrong. And that article says there's a major issues which the Fed is not tackling, which they should be tackling with regards to inflation. I thought will be an interesting discussion to talk about that article.
Yes, it's a very interesting thing. What actually happened is the Fed thought that after 2000, inflation is never going to return. So the people like Bernanke did lot of theories saying that inflation is never going to come because there has been last 20 years there has been no inflation in America or anywhere in the Western world.
I mean, it's been under control, meaning
No, they never
there's marginal inflation.
even when they printed like no tomorrow
Hmm.
in 2002 and 2008,
Hmm.
there was no immediate impact of on inflation. So they thought they had solved that problem completely.
Yes, no more inflation.
No more inflation.
Yes.
And they bought out all theory that China is supplying and the Chinese is keeping costs low and all that. The difference between 2008 and 2020 is
Hmm.
in 2008, only very few people got the money in. They got the hands on the mula.
Correct.
So they elevated the asset prices.
Hmm.
The middle class and the
You're talking about
average Joe,
2008 here.
average Joe did not get the money.
Correct.
That is why this Occupy Wall Street was there.
That whole movement started.
Yeah.
The divide of the rich and the poor.
Now the problem is
Hmm.
not only did you print money,
Hmm.
you gave it to everybody, all and sundry. You stood on the road and said,
Freely
like
distributed
helicopter,
cash.
freely distributed cash.
Yes.
It's like going on an helicopter and throwing money.
Hmm.
So it was definitely bound to come. And it came. But by like burying their head in an ostrich in a sand, they said it's a transitionary. Once things set up, it will become okay. The first signs came 6 months back when they should have been worried. When Amazon and restaurants were saying they could not find workers at $15 a hour. Remember, Kamala Harris was talking about making minimum wage at $12 an hour.
Correct.
But you
During
had
the
no employees
presidential.
at $15 an hour.
Correct.
So basically, there was a big shortage of employees at that time, and people are demanding more salary.
The reason, wait. The reason why that is happening is because people feel that even at $15 an hour, it's too little money because they have already have excess cash in their hand. I mean, what is the reason? What's the mindset? Why
There are
would?
two reasons.
Hmm.
One is they had money in the hand.
Hmm.
Second is they wanted to, because prices was rising, they said below this it's no point working.
Correct. Okay.
There's a guy called Edward Phelps, and what he pointed out is there's inflationary expectations. So without knowing, you set your wage demand
Hmm.
dependent on what you think is the price outside.
Okay.
But there is a subconscious connection. If prices go up,
Hmm.
you will not come for the same wage. Like I've been 10 years back,
Hmm.
before 2008, in 2003 4, I was paying my driver 3,000, 4,000 rupees.
Absolutely right.
Today I'm paying 4 times that money.
Correct.
But a software job has not become 4 times.
Absolutely right.
Entry level software job has not become four
Four
times.
times, yes.
So,
But the entry level driver job has become 4 times.
because there is a shortage of labor in that area.
That specific point.
Yeah, because too many guys want to be software engineers,
Not enough want
to be drivers.
Correct.
Now, this is exactly what happened. So, a lot of people studied because at 4,000, he wouldn't have even met any ends meet. Even today, I don't think at 20,000 plus ration, they don't meet their ends meet. So, they started to bid up the inflationary. So, you had a stimulus take. And for those who are working, you had a higher salary.
Correct.
And unemployment also kept on dropping to the lowest in the last 50 years.
Absolutely.
That means everybody who was employable got employed.
Correct.
So in economics, there's a concept called NAIRU, a natural rate of unemployment, below which if you push
employment below that
level, inflation will come. It was called as Philippi's curve.
Correct. We discussed about that in a few videos.
Yeah. So you violated everything what was known about economics. Not only did you keep interest rate low, you kept on buying all sorts of bonds.
Correct.
You bought government bonds, you bought corporate bonds, you bought housing loan bonds.
Correct.
There's nothing else to buy. And the Fed was buying those assets.
Correct. Giving more cash. Meaning pumping more cash into the market.
we were pumping more cash through the institutions into the market.
Correct.
The government decided to put money in everybody's hand.
Yes.
So
Whoever the Fed was not giving money to,
the
the government
government
said we'll pick up the
we
tab.
pick up the tab. There were software engineers whom I know
Correct.
who got $50,000-$60,000 loan, but zero interest with only processing fee of 0.5%.
Correct.
So the money in the banks went to these people, middle class, at a ridiculously low rates. So all this started a consumption boom.
Correct.
Now, post-pandemic, the production cannot be ramped up so fast.
Correct. And plus we have our own shipping logistics problems happening.
So shipping rates are at the highest because there's so much demand.
Correct.
In fact, the Economist did a video. The same laptop, same brand.
Correct. Yes.
Price in Japan and price in US.
Correct. Yes.
Nothing same. It's the same damn
laptop.
brand.
Yeah, everything's the same. Specs are the same.
Everything is same. The brand is also the same.
Same. Correct.
The price in Japan in 1 year had gone 1.5% down. In US, it's gone 5% up.
Correct.
It's a clearly man-made issue. And you kept on saying people kept on warning you. And it's not even people on the right, like the usual loonies, like Ron Paul who warned you. It was basically your own guy, Larry Summers, was warning you.
Correct. So this is where I'm very curious. The Fed and all these guys are, experienced, educated economists. They have come from a very prime background, and they have an immense amount of history to see what's been happening in the past. Fed is not something new. So based with all this information, where is this human error where they're not able to see it happen?
It is 2 generations, there's been no inflation, no?
So
when is the last time you saw inflation in America?
Of this size.
This size, 1980. These guys would have been in high school or in college.
So it's not registered.
It is not
registered in their memory, yes.
That's history.
Correct.
It need not repeat again. But if you look back, all that were problems in 70s were a problem now. There was an oil shock then, there's an oil shock now.
Correct.
Too much money was being printed, too much. I forget the name. The McBurn, some Scottish name, was the Federal Reserve there. He introduced a concept of core inflation, where you remove food articles and fuel prices. And he was willing to believe that there is no inflation.
Yeah, you only cherry pick what you want and you focus your numbers on
our own Indian thing. The 20% of the CPI basket is something which nobody uses. Like you have CD, you have cassette,
yes, correct,
audio cassettes, you have pin phones, button phones, and you say price never happened.
Correct.
But on what people are using, prices went up. This is one thing. The second problem the Fed did is when they stopped saying they stopped buying assets, they should have slowly allowed the asset to come down.
Correct.
As bonds were coming in maturity, they should have not bought it.
Correct.
What they said is we have not stopped, we have stopped. But whatever we have bought, we will continue to keep it at this level. We won't allow you to reduce it.
Correct.
Only now they are saying they will reduce it.
But isn't it too late now?
No, listen. If the balance sheet of the Fed has gone up 10 times in 12 years,
correct,
your economy has not gone up 10 times in 12 years. The law of economics is your money flow should expand at the rate with which your nominal economy plus inflation expands. Here you're 10 times and here you are only about 25 to 30 times. So when you have to drain that excess cash. And this is why the yield, that is the 10-year yield in the treasury, has moved from 1.5 to 3 almost. It's at 2.95 and it will go past 3.
Historically crazy levels.
So it's a 50% hike.
Yes.
Okay. And still they are managing to keep the markets afloat. That means this is a clear indication that is still too much froth.
Yes.
And when he increases rates, it will be 4 or 5%. That means more money will go out of the emerging markets, not only to our country, all countries, emerging markets. And with the first flight itself, Pakistan is down, Sri Lanka is down, Turkey is down, Russia is down.
Correct.
Okay. This will expand to more countries. This is why the article says the Fed has done a big damage because it moved too late. It has to move a lot more. And because it has to do a lot more, several world economic, small countries, economies will unravel because of this.
So according to the article, that means there's no escape from the pain.
There's no escape from the pain. Because now Russia and Ukraine are fighting. There's a shortage of wheat. Wheat prices have shot up.
Yeah, Sri Lanka
In
is in
fact,
deep trouble. Yes.
not only we. Ukraine is the fifth largest producer. Russia is the largest producer.
Correct.
Both of them are out of the market, and sanctions against Russia is not going to end anytime soon.
Correct.
So Egypt is suffering. Bangladesh is suffering.
No, all third world countries
All
are,
third world countries are suffering.
and especially food charities like your World Food Program and all that are all behind the wall because there's a huge shortage in the market.
No, the prices are shooting up.
Absolutely right.
So overall, there is a long way, and the asset markets are still not priced in the exact level of fall in this game.
So, what do you think the prospects of the next 10 years are going to be? Because the solution,
I don't
whatever
know
you're
for 10
saying,
years, but I know for sure that the world is going to have a recession in the next.
Yeah, but it's not going to be some ordinary recession. It's going to be quite dramatic.
A recession is 2 negative quarters of growth in a row. So, as far as I'm concerned, I'm protected, and there will be a lot of pain.
Correct. But how far do you think recession will have to go to become like a depression?
It won't, because then they'll start to stimulate again.
Okay. Again, that's true.
Yeah.
Anyway, this conversation has been interesting. I hope all of you found this interesting and would read this article.
Thank you. Even if they don't read the article, I think we have covered most of it.
Most of it, yeah.
And some of it which is not there also we have covered. Anyway, thank you for watching Be Rich. Thank you for watching Be Rich. If you like this content, kindly subscribe to my channel and turn on the bell notification. If you don't turn on the bell notification, you will not be notified every time we put out a video. And kindly consider sharing this content with your friends and relatives. Once again, I thank you for supporting Be Rich. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.